Hey guys, John.Hunter, your mortgage hunter, coming back to you again with another rate update. This one for the week ending in November 8th. So what a week, guys, right? The election, the Fed, no shortage of drama this week on the market. But we ended the week at a 4-month high in rates, and I'll get into a little bit why here in a second. So 30-year fix, 6.125 to about 7%. 15-year fix, 5.875 to about 6.5%. FHA, 6.375 to 7%. VA 6.375 to 7, down payment assistance 5.75 to about 7.375. And don't forget, these rates are based on credit score, loan to value, loan type, loan duration, income verification, property type, you name it, right? There's just a lot of variables in these rates. So call if you want an individualized quote. It can vary, but this kind of gives you a range. If you're paying attention week over week, you'll see that it's up a little bit. Definitely not as high as it was 4 months ago, but still higher than it was back in September, which we will get back there, guys. Just, be patient with this. It's a little crazy right now. There's just a lot of information out there. There is a lot of unknowns. There's way more unknowns than there is knowns. The market loves the Trump win, though, and I've been talking about this, that he's just way more business friendly, and the market loves it, right? President Trump has already talked about getting rates down to 2, which I really don't think he's going to be able to do, but there's just a lot of info. So the market right after had the best day in 2 years, and rates went up, right, to hit that high mark. Well, we've backed off since the Fed meeting, but really what the concern here is that Trump is going to light a fire under the economy. Inflation is going to spike. The Fed's going to slow down on their rate cutting, and rates aren't going to come down as fast as the market perceived back in September when we kind of hit the low. Now, that's not necessarily true, but the market's finicky. The market doesn't have all the answers clearly, and so they overreact. And so we've seen the last 2 days that it come down quite a bit. So the week didn't end absolutely horrible, not as bad as it was, say, on Wednesday, but there's a lot of questions to be answered. I do believe the trend is down. It will continue. The Fed cut rates 0.25%, but that's what the market expected. So, as I always say with the rate meetings, the Fed meetings, as long as the Fed does what the market expects, it's really a non-event. It's always about what the Fed says. And like they've been saying forever and ever, which is really boring at this point, that they're going to be data-driven, which means that we're in for a roller coaster week to week, depending on whatever the report of the day is and however it paints the economy. So I do believe that we are in for another cut in December, which the market's still pricing that in. And as long as there isn't anything too crazy, I think we will just see, depending on what the reports are, we're going to see this little high and low, but it will, I believe, continue to come down. I think when the market is convinced that we're going to be able to improve the economy without really lighting inflation on fire, Katie bar the doors. I do believe, too, that a lot of the unemployment reports that have been coming out are going to come out over the next several weeks, a lot weaker than anticipated. And when that happens, boom, we're in the game on, right? So there's a lot of predictions that in the next couple months, the veil is going to be pulled off on this smoke and mirror economy, which I do believe is the case, and then it's going to get real. So if you're waiting for rates to come down, which I have several clients out there that are, be patient. We're almost there. There is going to be a lot of drama between now and then. And as always, if you ever seen a market chart, it's never like this or like this, right? You've got the peaks and valleys. I think we're just in for that roller coaster. So I think we're coming off a 4-month high. We could hit new lows. I believe we will before the end of the year. So hang tight, guys. Stick with me. Just if you want to know what's going on, tune in every Friday for rate updates. I'm your guy, John.Hunter. If you want to get pre-approved, this is a great time to buy because prices are going to go up next year, guys. People are going to have a lot more money to spend. I think everybody's going to be in a better position. Oil, that's going to be a huge driver of inflation, guys. It really is. And we've already seen a lot of good things on that front just in the last 72 hours. So, guys, stay tuned. Come on back. I've got some other kind of fun videos here this next week. So definitely subscribe and like, and I will talk to you soon. Have a great weekend, and God bless America.